I didn't think it was possible, but we had a down week last week in the market, but the market surge continues on coming. Guys, this has been a booming market for the last 15 years. That's a big, actually it's going on 16 years here in March of 2025. That is a secular bull market. And right now, valuations are very high. And I know what people say about valuations now. Valuations don't matter. Well, that's what we say during market tops. And they're right until they're not right anymore. And then suddenly valuations will matter, and they'll matter with a vengeance. Now, before I go further, big week this week. Thursday, we got Nike and FedEx reporting. These are going to be big for understanding where the consumer is and where, because I've been saying lately, if you've seen our videos here on this channel, that I think the consumer is not as strong as people make it out to be. When you see stores like Home Depot, Lowe's, and Target having very poor or negative same-store sales, but yet companies like Walmart are surging on same-store sales, it tells me the consumer is trying to be a little bit more cautious. Inflation hit people hard. They're still paying off the debts that they took off from inflation. If you saw, credit cards balances skyrocketed when inflation kicked in. Why? Because people didn't want to lose their lifestyle. Understandably so. So how do you keep your lifestyle going if you don't have the money? You swipe that card. Another company that's reporting, Micron, big chip maker. This is a big one for people who love AI. They're reporting on the Q1 with estimates of $176 per share in profit on $8.55 billion in revenue. So guys, stay with this channel. We always do reporting. We love talking about the news. We love talking about earnings. But remember, we're trying to teach a principle-driven investing style. And what that means is we're investors, not speculators. And investors don't care about short-term results. They're not going to sit there and sell a company or buy a company because they did very well in a quarter. We're looking at the long run. What are the fundamentals of the business doing? Because another foundation of principle-driven investing is every investment is a present value of all future cash flows. And those future cash flows, they're going to be ups and downs from here on out in the future. Go look at any company you love, even NVIDIA. They've missed in the past. Microsoft, they've missed in the past. Google, Amazon, Apple, they've all missed in the past. And just because they miss doesn't make them a crappy company. So our goal here is to talk about the fundamentals. I still love looking at companies on a short-term basis, just to sit there and see what are they talking about? What BS are they announcing versus what substantive things are they announcing in their earnings results? It is a lot of fun for me. So please stay with us as we go through the week where we sit there and make these announcements. But as you know, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. And the weight of the market is not looking great right now. Guys, this is the S&P as of this morning. We are 121% overvalued based on history going back to 1928. That's massive overvaluation. To put it in perspective here, whenever we're 40% or more overvalued in history, that's happened 36 times, the next 10 years without dividends are a negative 0.2%. That's only 40% overvalued. We're 121% overvalued. As another comparison, the dot-com bubble, we were at 55% overvalued. And the next 10 years, look at those returns. -2, -2.4, -3%. Now, does that mean we're going to have -10% for the next 10 years? No, not necessarily. What it means, though, is in all likelihood, based on history, the next 5 or 10 years are not going to be as good as the last 5 or 10 years. But you're an investor. You should hope for that. That's what we're trying to teach here. You should hope for lower prices. Lower prices will make you more money in the long run. Now, if you're retiring in the next 5 or 10 years, I understand completely how that'd worry you. And I just want you to keep that in perspective. Maybe you take some risk off the table. Maybe you just sit there and stay aware of this because your goal should be to retire. And is it more important for you to make an extra 20 or 30%, or is it more important for you to keep your nest egg safe? That's the important part. Now, the stock market GDP ratio has received a lot of criticism. It tends to when the markets are overpriced. This is the highest level I've seen in my lifetime, by far. That's massive overvaluation. But there's another level, the cyclically adjusted PE ratio, which takes the last 10 years of earnings, brings it to today in today's dollars, so brings inflation in, factors in inflation, and says, where do we stand? Guys, we're at 38.54. Historical average is 17.17. We're 124.5% overvalued. Guys, any way you cut it, these are the two most reliable metrics in stock valuation history. Warren Buffett calls the stock market to GDP the most reliable at any given time, and they're screaming over valuation. So you're probably wondering, well, Paul, when's the bubble going to burst? Well, I got a little secret for you. We have no idea. But I truly believe there is a bubble. I look at Bitcoin, and Bitcoin is surging. Guys, Bitcoin has no intrinsic value. I finally saw somebody on Twitter yesterday finally say publicly, guys, I believed in Bitcoin in the early 2000 teens. Why? Because it stood for something. But the thing it stands for today does not exist today. And he's right. The whole idea of being off the radar, come on, give me a break. It's not going to be off the radar, especially as governments embrace it. When I see these Bitcoin people saying, we need government intervention, that goes against that's like saying, we want free market capitalism, but we want more government intervention. You can't have both. I do believe Bitcoin and crypto is a massive bubble. I think it'll come to a nasty end in its current form. Now, if the government comes out and says, we are making Bitcoin our official cryptocurrency, that's a different story. But even then, I think that's going to hurt cryptocurrency's prices. That's the interesting part. I don't think that helps cryptocurrency because the whole goal of crypto is to have off the books transactions happening that the government can't track. When in your right mind do you think the government's going to allow transactions to happen they can't track? Remember when crypto was not taxed, the gains weren't taxed, and guess what happened then? The government said, no, we want our tax money. This is not going to go away. The government gets what the government wants. And you're talking to one of the biggest believers in limited government, but it's my understanding that the government doesn't like that. People believe Trump's going to be the savior of Bitcoin. Maybe. I don't know how that happens. Remember, my voice is used in an HBO documentary about Bitcoin where I yell, Bitcoin is a fucking scam. And right after that is a video of Trump talking about how Bitcoin is BS, essentially. Now, is he a politician still? Absolutely. Did he get in the train to get people support? Absolutely. More power to him. But how is he going to save crypto? Just like when people thought in 08 and 09 that Obama was going to make it, so there were literally people out there saying, I don't have to worry about paying my mortgage anymore. We don't have to worry about gas prices anymore. Hillary Clinton stood out there and said, if you vote for Democrats, to vote for lower gas prices. And then Democrats won and gas prices skyrocketed. Give me a break. It's not their fault. But at the end of the day, no individual person is going to save you. We're here to teach you to save yourself and just being aware of what's going on out there. Now, it can be frustrating to see Bitcoin skyrocket, 105, it just hit. 105,000 per coin. I remember when it was 3,000 per coin the last few years. That's a 30 to 1 change, 40 to 1 change almost, 35. That's incredible. And it can be frustrating. You can have FOMO. That's what I'm trying to teach though. I have zero FOMO on Bitcoin. Zero. Why? Because I don't understand it. And that's another foundation of our principle-driven investing. If we don't understand it, we don't buy it. What's interesting to me is how many people out there who are Bitcoin enthusiasts say, oh, I'm an expert in crypto. A lot of them, oh, I understand it. Paul, you don't get it. No, you don't get investing. And I truly believe that. People think that just because you put money into something, it means it's an investment. Not true. Buying art. Paul, buying art's an investment. No, it's not. But you're telling me that buying a Pablo Picasso is not an investment? No, it's not an investment. Why? Because all you're doing is hoping that someday in the future, somebody will give you more money for it. In the time being, it's not going to spit off any cash flow for you. So if the market for that artwork goes away, what's your asset worth? Nothing. Now, with a stock, you're buying a piece of a business. You're buying a cash flow stream. If the market for that went away, you would still get dividends from the company. And as the company's cash flow and revenue increased, the intrinsic value of the business would increase with it. There's nothing with that with crypto. Nothing at all. It's easy to hate on me. Our most recent video we did on our main channel was a colossal success, and the amount of hatred I got was very relieving. I loved it. At the end of the day, we'll see what's going to happen. But in its current form, I don't see how this does not end very, very poorly. Keep in mind, I own 25 companies, 22 companies, and 2 ETFs and something else. I still find value in these markets. Is it hard? It's very difficult. But you can still find value when things are overvalued because in order for people to buy the popular companies, they have to unload the unpopular ones. But our goal is to find companies that prices are down while fundamentals are still getting better. So if that's of interest to you and you like the idea of having a principle-driven investing strategy, we're the channel for you. Thank you for your time.